All right, so for this, we're going to be talking about entering sales into Stripe sales into QuickBooks Online. And I do mean enter. We are going to be entering them using a journal entry, and we're going to create the template and everything. I prefer to do it this way with all my clients because this allows you, it's flexible, I think it's easy, and it allows you to enter the sales at whatever interval you want. I usually, for all of my clients, I usually just enter one journal entry at the end of every month in order to capture the entire month sales. So you can do this daily, weekly, monthly, whenever you want. And the reason for that is what we're essentially going to be doing is we're going to be capturing your sales and other things like the Stripe merchant fees and things. And then that's going to be debited with your Stripe balance in your bookkeeping, whether that's a current asset or this says a bank account in QuickBooks Online. And so the only debit we're going to be doing during the sale entry and the journal entry is again just that Stripe balance. And then throughout the month, whenever you're transferring funds over into your actual business bank account from Stripe, and the only thing we're going to be doing there is categorizing it as a transfer, a debit and credit from your Stripe balance to your bank account. And that's the reason why you can actually enter these sales at whatever time interval you want, because with this entry we're going to be doing, we're not going to be doing any debits into our actual bank account. So that doesn't affect our bank reconciliations. So that's why, again, why we're able to do it at any interval. And so what we're first going to do here is I'm going to go through the setup phase of the template with the journal entry, and then we'll go and actually put in a entry as an example using real numbers of what that would look like. And then at the end, I'll briefly discuss how you can reconcile your Stripe balance just like your regular bank account and anything like that. The first thing what I like to do in these scenarios is just to keep everything organized. I like to create an Excel sheet, like something like this. And I already went through it for a lot of this and started the process here. The first step we're going to do here, before we start looking too deep into Stripe, before we start trying to work with the template or anything, I like to first make sure that all the associated accounts are going to be needed are in your chart of accounts ready. So that's step one here. We'll go now into Stripe and I'll show you what I mean here. The report here that we're going to be looking at for this, the report that I like to use for this is the balance report is called in Stripe. So if you go to reports here, and then you'll see this balance report right here. I like to go to this report right here. And as of right now, I wouldn't worry too much about the actual numbers or anything yet. So for this date range, put in whatever date range that you need to in order to get like a decent amount of numbers and things here in this balance change. So if you want to make it for the full year, whatever you need to do to, if you can, again, just get numbers down here, because all we're going to do right now is just go through and figure out which accounts we need in our chart of accounts. That's all we're doing right now. And this is a kind of a complicated scenario here. This is why I want to use in this video, just to kind of show you all the different types of Stripe transactions we could potentially have. I'm assuming that probably most of you will just have a charges, a refunds, and a Stripe fees, and then the balance. I'm assuming that's what most of you are just going to have here. We most likely probably won't have things like disputes, transfers, transfer reversals. But again, I wanted to show this example just to kind of give examples of how flexible this can be if there's a bunch of stuff like this. So we'll go through here and we're going to swipe back and forth between the Excel sheet, and just all we're going to do is just fill out this first column here. So it's account name. All I want you to do here is just write out the names of the accounts. Don't worry about anything else yet that we're going to need in our chart of accounts. So we have the charges here, and if you hover over that little information thing here, it'll tell you what it means. So the charges is going to be the sales. So we write down sales right here in the account name. And then we have refunds, that's self-explanatory. So we write down we want to have a separate refunds account. In this case, so we wrote down the refunds account. We need that in our chart of accounts as well. Disputes, and I'm not going to get too involved into all this. What we're going to do in this case, I think we're going to include the disputes as refunds. But for these kind of weird accounts here, you need to figure out, looking at this information, of what exactly it means for your scenario, and then figure out which chart of account you should choose for it or create a new chart of account to handle that scenario. But I think for this example, we're going to put disputes, we're going to add it into the refunds in the chart of accounts here. Same thing with transfers. In this particular case, we're going to count transfers as cost of goods sold. I'm not going to get into why. Again, just figure it out for your own business, but that's going to be cost of goods sold right here. And then we have the reversals. We're just going to back that out of the cost of goods sold. And then we have the Stripe fees here. And also we have the fees here as well. So we have the fees here, and then we have additional Stripe fees. So in this particular case, we're going to have a separate Stripe fees, expense account. And then finally, the last one here is just a balance change. And for that one, we're going to have a Stripe balance current asset account. We're going to set it up as current asset. Some people set it up as a bank account. It's all the same thing in your balance sheet. So yeah, the Stripe balance most likely is either going to be a current asset or a bank account. What we established so far is that in order for us to create this template and everything, we need a sales, a refunds, a cost of goods sold, a Stripe fees, and a Stripe balance. We need those 5 accounts in our chart of accounts first. That's why I like having this in COA, in the chart of accounts, so you can go through and check them all and see if they're in there. So if we go to QuickBooks, go on the gear icon here in the top right, and then under settings here, the chart of accounts, or it's under lists. There's a few ways to get there. So we can go in our chart of accounts and just start searching and seeing what we have in our chart of accounts. And if they're in there, just put an X. So I did that for these 4. I just searched them. I saw that they were in the chart of accounts. I marked them that they're already in there. The one that we don't have, so we don't have the Stripe balance. And so we can just go ahead and create that now. So we're going to go to new. And again, you can either make it just a current asset or a bank account. It's going to be treated essentially the same way. So we're just going to do a current asset here because a bank account is a current asset. It's just whenever you're dealing with it in QuickBooks, they separate the two out. But we're just going to make this a current asset and we're going to call it Stripe balance and save that. And then we can go over here and exit off. Oh, and also too, so we knew with the account type, we knew what to choose when we're doing in the chart of accounts. So that's another thing you're going to need to figure out. Like obviously sales will be income. The refunds is also actually an income account. It's just going to be debited. So it's going to be putting negative incomes on the top of your profit and loss. With Stripe fees obviously is an expense. And again, Stripe balance be a current asset. So you want to figure out, especially if you need to create new accounts in your chart of accounts, you want to figure out what the account type should be whenever you're entering them. So now at this stage, we have all the accounts associated with our Stripe report, our sales report here in Stripe, all the accounts that are going to be needed in our chart of accounts and our bookkeeping. That's a step that we have so far. Now what we can do is we can start entering them into a template here, into our QuickBooks Online. And this will be a way for us to easily just click on the template, have the journal entry ready to go, and then all you have to do is just copy and paste the numbers in on a month-to-month basis. So we're going to go ahead and start to create that template now. In order to do that, again, in QuickBooks, there's usually multiple ways to get to the same place. Got the gear icon here in the top right, and we can either just hit recurring transactions here, or we can go to all lists again, and recurring transactions. There's a few ways to get there. So we're going to hit new here. We're going to hit new in the top right, and we're not setting up a recurring transaction here, but going to this recurring transaction page is actually how you create templates as well. And again, we're going to be creating a journal entry for this example. So we're going to do new recurring journal entry, name it whatever you want, Stripe sales. Here's where we make it a template. If we keep it as scheduled, this is going to actually post transactions at a certain interval. But what we're going to do is we're going to change this to unscheduled. And what that does is that essentially makes it a template. And I'll show you what that looks like after it's created here of how you can access this, in the future. So the first thing I like to do, I like just breaking things down personally into just small steps like this. So what I would do next before we start worrying about this kind of stuff is just enter them all first into the template. So we're just going to go through, we're going to add sales, refunds, cost of goods sold, Stripe fees, and Stripe balance. We're going to add those 5 accounts into the template. And you can just do that by scrolling through and just starting to type stuff in and searching for them and then just adding them. Generally, what I like to do as much as possible just to kind of help with all this is just looking at your report in Stripe or whatever point of sale you're using whenever you're creating these kind of templates, and just in the order that the report shows you is usually in the order I like to add these accounts. So that way you can kind of go down the report and just copy and paste as you go, going down here. It's not always as straightforward in Stripe sometimes, because sometimes things like fees and stuff are kind of all over the place, but just generally as much as you can, it would just be nice to put them in order. So now we have the 5 accounts that we're going to be using into the template here. What I like to do next, so I like to start adding in descriptions. And well, actually first, let's just figure out whether these accounts are going to be debited or credited in the template. And then you can just put ones or put notes in your description or anything. I like to do both of whether they're going to be debited or credited. It would always be a good idea for you to know, and you should know if you're doing your own bookkeeping, you should generally know debits and credits like this. You should know, for example, that your sales account should be credited in order to increase it. The Stripe fees, which is an expense account, should be debited in order to increase that expense account. But outside of that, what I've always noticed is that in this particular case with Stripe, there's just kind of a general rule that you can use. And that rule is that when you're looking at your report here, if these numbers listed here to the right, If they are positives, then they're going to be credited. And if they're negatives, like these numbers here and here, if they're negatives, then they're going to be debited. That's just the way it works out in this particular report. And the reason for that is that the difference of these numbers, so you have the positives and negatives, and there's going to be a difference at the end until we reach this last line, which is a straight balance. And the difference of those positives and negatives is going to be this straight balance amount, which is going to be debited. And that's the reason why it works out in this particular case to just follow that rule if you want, of just positives credited, negatives are debited. So we're going to go through this report here and figure out if it should be a debit or credit. So first we have the charges. And again, the charges are going to be is the sales. And it's positives here, so we know that that's going to be credited. So we go back to the template. I like to just put a 1 here under the credit. And then I think it would also be a good idea too to put a note in the description that it's going to be credited. And we're going to go through. So next we have the fees. And the fees here and here are both negatives, so that's going to be debited. So we can go to the fees here, put a 1, and then a description, just put debit. We have refunds. Again, we see that they're negatives here, so the refunds are going to be debited as well. And that's just going to, again, create a negative income on your profit and loss. And then always the stripe balance at the end here, it's going to be debited because you're going to be increasing your stripe balance. It's a current asset, so debits are going to increase that balance there. And then what you have to do just for the template, so these have to equal. It won't let you save the template. See, I'll show here. It won't let you save. So if you are putting the 1s here, just balance it out so that it's each 4. So they don't all have to be 1s. But anyway, so we have in the descriptions here whether they're going to be debited or credited. Now what I like to do is go through the report one more time and then start to figure out what all these numbers are going to be made up as in the report. And I like to also add that in the description as kind of notes to yourself in the future of what they're going to be in the Stripe report. And here's what I mean by that. So first we have the sales and we have the charges. And that's just going to be the gross amount of the charges. So I'll just put credit and then I'll put a note, gross charges. So that way we know always in the future, whenever we're doing this is going to be the gross charges on the Stripe report. Next we have refunds. That's self-explanatory. It's going to be the gross refunds on the Stripe report here. So again, after the debit, we'll put refunds gross. So here we got cost of goods sold. And in this particular case, actually I forgot something here. So when we go down, we have the refunds and we have disputes. And we mentioned before that we're going to add disputes as refunds. So actually what we're going to do here is we're going to do refunds gross plus disputes gross. That's going to be the calculation in order to come up with the full refunds amount. So still going down here, we see transfers and transfer reversals. So we're going to basically make cost of goods sold transfers minus transfer reversals. And then we have the Stripe fees. So in this particular case, it's going to be fees here plus additional Stripe fees. So it's basically going to be adding all the fees that are negatives in here. Sometimes if you have things like disputes or refunds or something, if you have fees that are actually positives, if you're getting fees returned, then you would subtract that from the total fees amount. So what you're doing essentially is, it's a little confusing here, but you're taking the total negative amount on the fees on this particular report. So if you have $1,000, negative $1,000 in fees showing here, and then you have a positive 100 because you maybe returned and got fees back or something, then you would put $900 in your fees because that's the total negative amount here on this report. And then the Stripe balance is going to be just that. It's going to be the debit of this Stripe balance here. The balance change from activity. And just to be clear, we can add that as a note here too. And again, I know that most likely you're just going to have charges, sales, merchant fees, and Stripe balance. You'll probably only have, and then maybe refunds. So you'll probably have 4 accounts here and not so much of this cost of goods sold and stuff. But again, I just wanted to show all the different. But either way, I still think it's a good idea to just always add in where on the report you're pulling these numbers just to make it easier on you, make it more consistent. And so you won't have to keep going back and forth and figuring out where potential errors are if these numbers don't end up balancing on the debits and credits. So the last thing I would do here in terms of the creation template is just add in the name column here. So you can just put in like a Stripe customer or something, or a Stripe vendor in the case of the fees. So it's always a good idea to add the name column here. And doing this will also, if you're interested, if you're just using a bulk kind of sales account, then whenever you're tracking by customer like this, then you can run separate reports like sales by customer. So here we have the template. This is the template creation process. So we're just going to go ahead and save this. And now where this is located is always, if you go just to your recurring transactions list, again, there's multiple ways to get there. If there's a bunch of them, you can search, but we see here that we now have this Stripe sales template in here. And the reason it's a template is because it's unscheduled. And at any moment, we can edit it if we need to by hitting this arrow, or we can hit use, and that'll just bring up that journal entry in order to enter in these Stripe sales. So let's go ahead and do that. Let's go ahead and go through an example here of entering these Stripe sales and how this would look like for one of my clients, for example, here. So it is currently August right now when I'm filming this. What I would do is go into Stripe. I would run this balance report where I showed you. I would set the date to last month. So set the date for all of July, and that would come up with these numbers here. And then I would go to the recurring transactions page here, find the Stripe sales, hit use. So everything that's happened so far in the month, we haven't entered any Stripe sales yet. And we most likely categorize these transfers. We'll talk about that. We'll talk about this after. But then I'll just change the date to the end of July, and this entry will capture sales for all of July by putting it in the last day. You can name this whatever you want, like Stripe sales. And then we'll just go through now and basically just copy and paste these numbers into here using this credits or debits and using the description of where to find it in the Stripe sale. So we have the first line, which is sales, which is going to be the gross charges as a credit. We go to the Stripe report. We see the gross charges here. So I'm just going to copy and paste that into the credits here. Now here we have refunds. And so that's going to be the refunds plus to the disputes. So again, into Stripe, I'm going to do this off screen, just using a calculator, but also just so you know. So copy and paste just the positive amount, not the negative amount. Also, something that's cool about QuickBooks is actually so here what I'm doing, so I have sorry, that was fees. So we have the refunds here. So if you copy and paste just the refunds here, and then copy the gross amount of the disputes here, because again, we're adding refunds and disputes in this case as refunds total. So we just copied that to 4360. What you can do is click like this, add in a plus sign, and then paste. So now that's adding those two numbers, and then tab over and it'll add it for you, just like an Excel sheet or something. So that's the total there. Anyway, that's just a little trick for you if you want to do that. Next, we have the cost of goods sold, which is going to be the transfers minus the reversals. And it's going to be a debit. So again, all the negative numbers are going to be debited, all the credits are going to lower that. And we have the transfers here, gross amount, this negative 101,000. And then we have the transfer reversals, which is a positive amount. So what we're going to do in this case is we're going to take this full number, we're going to subtract this amount in order to lower this total cost of goods sold number here. Now we have the Stripe fees. You might just have one, fees right here. But in this particular case, we're going to add this line of fees. We got the fees here, and then we're going to add finally this additional Stripe fees. We're going to add those three numbers together in order to come up with our total Stripe fees for this month. All right, so we got the fees added in there. And then finally for this last line for this Stripe balance, what we're going to do, again, we can see the notes here, balance change from activity, which is right here. We're going to take this number and we're just going to copy and paste it into the template here as a debit. And now what should always happen, and it won't let you enter this journal entry without this happening, because it's just the rule with accounting with journal entries, is that these columns, all the debits and credits, they need to match. And this is the way, whenever you're entering these, to double check and make sure that you're entering these correctly, is that whenever you copy and paste the Stripe balance as a debit, that should equal out the columns, the totals here. And if the debits and the credits are not equal, then that means it's entered incorrectly. And that means that somewhere along the line, whenever you were doing all this, you didn't credit all the negative positives in this report, and you didn't debit all the negative amounts. Because again, what you're doing is you're taking all the positives and negatives, which is the balance change from this activity, and the net amount of that is always going to equal this balance change, this Stripe balance debit increase into your bookkeeping. That's just the way this report works, and that's the way the journal entries work. So if it's not the case, you go through and figure out where the positives, negatives are, and where you potentially might have miscalculated here. So we have everything entered, we have everything matches. What I usually like to do personally, this is optional, I like to just delete the description just to keep it clean, completely up to you. I like to have the description in there in the template for notes, and then I like to delete them after I enter it for that particular time. But again, that's obviously completely optional. And then we're going to hit this arrow here, and we're going to hit save and close. And then what that essentially did is that entered sales and all the other associated things like cost of goods sold, merchant fees, things like that into our bookkeeping. So if we look at our profit and loss for July, and we're going to look at the balance sheet as well. So what that did, that entry that we just created, is that it increased our sales by the total amount of the Stripe sales. It accounted for the negative amount in the refunds income account, and then it also increased our cost of goods sold here, and then it finally also included the Stripe fees expense. So in our profit and loss side of things, it entered everything that needs to be entered for that month in terms of Stripe activity: the sales, the cost of goods sold, which you might not have cost of goods sold in Stripe, and the Stripe fees. And then on the balance sheet side of things, what it did was that it increased the Stripe balance. I'm going to talk a little bit more kind of on the back end of this in terms of the transfers. So what you're most likely going to be doing throughout the month, whenever you're receiving funds from Stripe, most likely we're going to be doing is transferring those funds into your actual business bank account in order to get that cash flow. So the way that works, because you're tracking the sales and fees and everything during this journal entry, the only thing that you need to do in your bookkeeping whenever that transfer is made is just basically transfer it from the Stripe balance into your checking account, because these are both asset accounts. It needs to credit your Stripe balance and debit your checking account if you're doing it as a journal entry, but most likely you'll probably just be doing it as a transfer because that's how it looks in your bank feed. And you can also set up a rule for this. That'd probably be a good next step, is setting up a rule of whatever the description is that if you transfer from Stripe over to your checking account, whenever you're looking in your checking bank feed, in order to have that be categorized as a transfer from Stripe balance to the checking account. What that ultimately is looking like throughout the month, it's like, so here you have, here you have in the bottom, you have the payout section here. So in this particular case, there's 3 different payouts throughout the month. What's going to be happening is that throughout the month, all you're going to be really tracking is just those transfers. So your Stripe balance is going to be going into the negative throughout the month. So in this particular case, when the month was going on, $22,500 was transferred from the Stripe account to your checking bank account. And it increased throughout the month from sales and everything. There was an increase of $23,330.32. So what that would look like in your bookkeeping is throughout the month, when you're categorizing these payouts, your Stripe balance is going to go into the negative by $22,500. And then when at the end of the month, whenever you enter all the sales, it's going to increase it by the $23,320 and bring it up a little bit into the positives again. So that's what the workflow is going to look like on that end. So essentially what it is, you have the balance summary up top here. So you have your starting Stripe balance, and then you have your balance change from activity. So you have the net balance change here. And what that is this number right here, the increase in Stripe balance for the month. So you have the $23,330.32. So again, you have the starting balance, you have the balance change, which is the activity that happened throughout the month, the sales and fees and things, which is what we entered. And then you have the total payouts. And the payouts are when you just transfer money out of your Stripe account, most likely into your business bank account. And then at the end here, you have your ending balance. And a cool thing about this is, just like any other bank account or anything, you should actually be reconciling now this Stripe account, this Stripe balance every month. And what you would just essentially do is just choose the Stripe balance in your reconciliation. And then what you do, you go to the same page here in this balance report here. You would copy and paste this ending balance as of July 31st. Enter July 31st. And then you would reconcile it just like any other account. And you'll reconcile that entry that we just made, and then the payouts and things. So this way you can always check the accuracy of this Stripe balance account as well on your balance sheet. So I hope I covered everything. Again, I wanted to give an example like this where there's a bunch of stuff going on, just to kind of include how there's some flexibility here. This is a great way, I think, to just easily enter sales in the QuickBooks. Also too, so yeah, I realized that I haven't been really posting a lot of videos this year on YouTube. I think I only posted maybe two or three. And the reason for that, I've been working a lot of time and energy into an online course, like a full bookkeeping online course that I finally was able to release, I think 2 or 3 days ago, which I'm really excited about and proud about. Yeah, I wanted to just focus all my energy on that in order to provide, because I'm asking people to pay for that course, to provide like a really premium content course, I think. But anyway, so that's released now and it's done. So having said that, I do really plan for the remainder of this year and into 2024, I do really plan to, again, start uploading these free YouTube videos at a much higher frequency now that I can focus my energy, again, on the YouTube side of things. So I appreciate you sticking with me, and hopefully, again, in the near future, you'll be seeing a lot more of these videos on a more frequent kind of basis.